ongoing volatility does not yet signal an end to the bull market. Joining me here at Post 9 is Julian Emanuel of Evercore ISI. Julian, good to see you.
Great to be here.
So, not the end of the bull market. How much pain do you expect? What have we done in terms of resetting valuations and price and expectations?
So valuations have gone from very expensive, not egregious, very expensive, to just expensive. But when you think about the elements that end bull markets, valuation alone is not one of them. You typically see what we would characterize an uncooperative Fed. That's not going to be the case this time. The Fed is going to cut rates twice this year, in our view. FOMO, certainly not there after the last month's performance. And then the bond vigilantes, and I think, if anything, this has been a positive, the fact that whether it's due to a growth scare or a policy or what have you, yields are contained. So what you're left is then the probability of recession. Now, the dislocations from the policy uncertainty have certainly raised that specter in people's minds. We think what you're actually pricing in right now is essentially a full-on case of stagflation. And the reason we say that, and it's not our base case that it turns out that way, is because when you look at past stagflation episodes, the market tends to average down 10 on an annualized basis. We're really trading along those lines. And you see leadership from the very defensive sectors, staples and healthcare. Put that all together in us, we think a lot of the pain has been discounted. The negativity is still quite intense.
Yeah, that Bank of America Global Fund Manager survey that was out today actually had stagflation as sort of the highest answer among people who said, what kind of environment are we in? We need to define that maybe a little bit. Is that just that, you know, there's an upward bias to inflation and risk to growth? I mean, it's obviously not 10% unemployment and 10% inflation.
So we actually think that there are breakpoints, and psychologically, and actually this volatility, I think in a lot of ways confirms this. Stagflation to us is anywhere from 0 to 1.5% on U.S. GDP. Obviously, less than 0 is more akin to recession. And inflation, core PCE at 3% or higher. Now, look, the data has been mixed. And there were elements of last week's inflation reports that tell you that if we didn't have tariffs staring us in the face, we'd probably start to continue on that path towards lower inflation. And it's not clear that that isn't going to be the case.
Right. Yeah, we're still kind of within the bounds, I guess, of that. You mentioned that we don't have an uncooperative Fed. We have the decision tomorrow. Do you think there's a risk that the Fed is going to be interpreted as uncooperative at some point if they essentially say, we're just staying pat as long as possible?
I think, again, part of this dialogue is separating the sentiment data from the hard, the statistical data. And the statistical data has yet to really say that we're in a substantive weakening of the economy, which is why, given all the noise around DOGE and potential job cuts there, the data over the next number of weeks is likely to be important. But look, a week and a half ago, Chairman Powell made the point that he felt that the soft data and the hard data were separate, and we do think that he's going to be able to thread the inflation part of the stagflation needle. It's the stag part that's gotten people concerned at this point.
And the only other piece I would sort of pull at here is, you don't think that we saw some signs of FOMO at the peak or in the fourth quarter when we had a little bit of the momentum and the meme stocks running? And
no,
like
so our view there is that was not a sort of generalized, all guns blazing capital market cycle like what you typically see for an extended period of time prior to a top. That was much more akin to what I would call in early 2021 the meme stock era. Essentially a select smaller amount of market cap was speculative, but not enough to really get the FOMO that you typically see at major tops.
So your base case from here out is we've maybe seen the low for a while, and you still kept your upside target?
See, we're sticking with 6,800. This 3 steps forward, 2 steps back volatility is not a surprise to us. Was that the low last week? Look, this is not going to be a V bottom. It's going to be a process. It's subject to incoming news on tariffs and Russia and this and that and the other. But ultimately, we do think the pieces are starting to fall in place for what we think will be a better number of months ahead.
All right, Julian, good to see you.